Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. As you all probably know, you've seen that the recent earnings report that came out for Palantir is not very positive, which is why the PLTR stock price is falling right now. In this video, we're going to look at their future stock price predictions within the first year or the next 12 months, and what the company could be worth in the future. We're going to be going over their latest price predictions, latest price targets, and their news updates, including dissecting their earnings report, which I literally predicted before it even came out. If you want proof of that, you can look at the video I posted last week on how Palantir is doomed regarding this upcoming earnings report. I told everyone that they're going to slightly beat on their revenues and that they are going to have a disappointment in terms of their earnings per share, and that is exactly what happened. So for more news videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. Right now, the PLTR stock has fallen down to around $9.81, which I literally told people it was going to do after the earnings report. I said Palantir is going to use this as a correction opportunity to bring their stock price back down because right now it's trading at a slight premium. The current stock price targets that professionals have on this company range anywhere between $6 on the low end and $20 on the high end, and these are 12-month stock price targets. Now, for me, I think if investors can have an average price around $6 to $8, that's going to be your best average cost basis for this particular company, but naturally the lower the better. Palantir, if you didn't know, recently released their second quarter results on Monday morning, and ever since then the PLTR stock price fell by around 14%. Their earnings came in at a loss of 1 cent per share, when in reality they were supposed to bring in an EPS of 3 cents per share on the positive side. So clearly that was an earnings per share miss. However, they ended up bringing in around $473 million, beating estimates by around $1.7 million, which is pretty good in my opinion. Palantir's revenue for the quarter increased by around 26% year over year, while their commercial revenue grew around 46%. Again, I talked about in my last video that Palantir is scaling their commercial clients and their commercial revenue segment at an astounding rate, to where eventually I personally think that their commercial segment will end up bringing in more revenues than their government segment. And so far, this has been coming true because their commercial customer count increased by around 250% on a year-over-year basis, growing from just 34 customers up to 119 customers. So let's actually dive in to see what the CEO had to say about these various developments. Well, if you didn't know, the CEO, who is Alexander Karp, believes that the company's most significant growth is yet to come, and in this instance, I agree with the CEO. I think Palantir Technologies is a clear holding opportunity for the long term. If you do not plan to hold this company for the next 5 to 10 years, I'm telling you, you're going to be better off selling the company now. However, if you have the patience to hold this company for the next 5 to 10 years over the long term, while not overexposing yourself too much to this company, then I think it could be a very lucrative investment because I believe in the company over the long term. They have solid fundamentals. I like the technology and I like their overall market. And if you've been watching my videos for long enough, you know that I don't have over a 5% allocation to any single growth stock in my personal portfolio. I like to build my wealth with mutual funds, index funds, and ETFs and those types of investments. However, occasionally I will reach out and grab a single growth stock such as Palantir Technologies, SoFi, Tesla, and a couple others to bolster my portfolio in the meantime. The CEO of Palantir even says, and I quote, "The strength and momentum we are seeing with our customers in the United States is a reflection of the refinement and maturation of our software platforms, which we believe will continue leading to increasingly broad adoption across sectors," end quote. And I honestly do agree with him here. Palantir also gave a revenue prediction regarding their quarter 3 earnings report, where the company is supposed to bring in around $474 to $475 million. And quite frankly, I'm disappointed in this forecast. Even though I think this forecast is accurate, this is not looking good for Palantir Technologies right now, because this is literally extremely close to what they brought in this quarter, and we want to see them growing quarter over quarter and year over year, and it looks like in the third quarter we're not going to see that, which could act as a negative catalyst for the PLTR stock price next quarter. They also have a full year guidance of the company bringing in revenues of around $1.9 billion to $1.902 billion for the entire year. The CEO even reiterated his bullishness on the company, and he said, and I quote, "We are working towards a future where all large institutions in the United States and its allies abroad are running significant segments of their operations, if not their operations as a whole, on Palantir." End quote. And I think that is a phenomenal goal, because I already like their goal of being the default operating system for the government, but I also like their goal now, which is to be that same type of default operating system, but for the commercial enterprises as well. And because I think their commercial institutions are going to be the thing that bring this company profitable, I think Palantir can achieve that. However, if you don't have the stomach or the ability to hold Palantir until 2025, regardless about what the stock price does in the short term, then this stock just may not be for you. The important question we need to ask ourselves now is, will Palantir be able to continuously grow at a double-digit growth rate in regards to the revenue to meet a 30% CAGR, which is their compounding annual growth rate, during a very volatile and turbulent macroeconomic environment that we are in right now? Due to recent developments that are negative in the overall macroeconomic environment, this is going to have a lasting impact on Palantir's overall financials, which doesn't look good for shareholders in the short term. However, their long-term fundamentals are still intact. Remember, after releasing their Q1 earnings report just a few months ago, Palantir's management agreed that they had weak guidance for Q2, and similarly, right now we have their Q2 results, and they are also calling for weak guidance in Q3. Not because there's anything inherently wrong with the company, but rather because the macroeconomic environment is so negative right now. Considering that Palantir in Q1 grew their customer count by around 86% year over year, clearly that has slowed down to where now the company no longer has an opportunity to beat its guidance significantly, because the best way to beat their revenue guidance is to attract more customers and clients, which thus will increase their revenues. Now, what I do want to bring to your attention is that the defense spending budget for NATO and its members have actually increased, which is a very good long-term growth catalyst for Palantir Technologies, especially because these NATO members have connections with the United States Department of Defense, which Palantir works very close with. So if these other NATO members can adopt Palantir's technology, or even use them more than they are using them right now, that is going to invigorate their overall government revenues, and I think this is very plausible, which is why I think this will happen over the long term, which is why I'm holding the PLTR stock for the long term, which is why I personally am not particularly concerned with this short-term news updates or these short-term stock price pullbacks. Now, let's not forget that Palantir is one of the few companies in the entire world that has a level 6 Department of Defense SRG authorization, which allows very specific companies to store and transfer secret classified data through their software platforms. And Palantir is one of the few companies that actually holds a level 6 authorization, so that is very positive. We also need to look forward to corporations adopting Palantir's technology, particularly their Foundry platform, because as enterprises, agencies, and corporations, as well as organizations, continue to innovate and grow, they need to become more reliant or even need a platform that Palantir offers to handle all of the data that they are getting from orders or selling things, because Palantir can interpret these large data sets and help the management of these companies make critical decisions. If you didn't know, Palantir is recruiting people like crazy right now, and they even expect to increase their overall headcount by around 25% before the end of 2022. So clearly Palantir has something up their sleeve, because by hiring more employees, they are anticipating to grow their overall company, which means that in the future, probably Q4 onward, we could see a huge revenue increase on the future contracts that they plan to acquire. Despite an expensive forward price to sales ratio, or PS ratio, of approximately a 12, which is rather high because ideally we would want it below 10, Wall Street still believes that there is upside left in this company despite the current stock price. In case you have forgotten, Palantir has an extraordinarily strong balance sheet because they have cash and or cash equivalents that is valued around $2.52 billion, and they also don't have debt. The reason why this is very good is because even as interest rates rise because because of the Federal Reserve increasing the interest rates to get inflation under control, this actually doesn't impact Palantir Technologies as much as other growth and technology companies, because normally growth and aggressive growth companies have a lot of debt. And as interest rates rise, that means the company is going to have to pay more on that debt. However, Palantir virtually has no debt and around $2.52 billion worth of cash or cash equivalents on their balance sheet, which means they are sitting very pretty right now, and a full-on recession isn't going to impact them very negatively. Now, it may impact the stock price because investors are going to freak out and liquidate really good growth companies, which just means investors like you and I get to pick these companies back up for a much cheaper price because we look at the financials and fundamentals of these companies. So even if interest rates continue to rise, it's not really going to impact Palantir Technologies. And I also want to add that they have an insanely high gross profit margin of around 80%. Wall Street currently has a consensus for their business that it will grow and continue to grow at around a 30% CAGR from now until 2025, and that's exactly what management is saying right now. So despite Palantir's premium, we can offset that risk because of their very high aggressive growth rate. The two main problems, in my opinion, would be the insider selling and the stock-based compensation, both of which have declined significantly. For instance, Alex Karp's options expired in December, and we haven't seen as much insider selling lately as we have in the past. I also want to say that the stock-based compensation expenses, which are non-cash expenses, have also started to decline, so these are both very positive developments. I also want to say that Palantir is a growth company that is going to struggle during this worsening macroeconomic environment, because as the Fed tries to get inflation under control, this is going to cause investors to liquidate risky growth companies and technology stocks, and it's going to have them invest into bonds or safer companies like blue chip value stocks or ETFs. Lastly, I want to mention that we can't forget about Palantir's SPAC investments or special purpose acquisition company investments. And the problem with SPAC investments is that they do terribly during times of uncertainty and high interest rates. So Palantir could have significant unrealized losses because of their investments. However, I do want to point out the positive side, because for a few companies that Palantir is invested into, where they have an equity stake in the company itself, such as Black Sky, ticker symbol BKSY, which is a geospatial intelligence company, and they have been winning major awards in both the private and public sector. So that is very positive. So what does all of this mean? It basically means that if you're not willing to hold until 2025, this may not be the company for you, but I would love to hear your thoughts on this company. Remember to go and smash that like button right now for more videos like this one, subscribe if you are new, and I will see you in the next YT video.